effect, obviously. And look who's here, the Super Bowl himself. His name is Mike Lee. Every time this guy recommends a stock and says it's going to the moon, he's done very well indeed. So tell me about, you've got three today. NVIDIA, already at a record high, going higher?
Yes. Oh, yes. Yeah. So Stuart, the market is looking at the AI infrastructure build out the way compared relative to the 1990s and the infrastructure build out. And so if we remember this internet bubble, a lot of that had to do with the fact that we were able to build an infrastructure to handle data packets for the internet by the late 90s, and people thought that infrastructure build out was going to continue on forever. So what's priced into a lot of these chip stocks right now is that we're about a year to 2 years away from having an infrastructure where you're only going to need 3 to 5% growth year over year, not the 40, 50, 60% we've been seeing. That's 5 years away. That's not 18 months away. And so the growth rates for a lot of these stocks, 15 to 18 months out, collapse according to Wall Street estimates. That's completely wrong. It's going to go on for a long time. NVIDIA is going to be the primary beneficiary of this. I mean, just look at Google. Going to spend $85 billion in capital expenditures over the next year. The bulk of that is going to go to GPUs, not just NVIDIA. They spend $10 billion a year from one part from Broadcom, but AMD and Marvel, those stocks are trading at ridiculous discounts. There's no reason for them to be there. NVIDIA is going to have an unbelievable quarter, especially because they're going to be able to sell their old chips to China. All these stocks should be much, much higher.
Pick up on this. Marvell, $73 a share now. Where's it going?
I think it's an easy double over the next year.
Double over the next year. AMD, Advanced Micro Devices.
Yeah, I think that's got about 50% upside. This stock has really moved a ton this year. Down in this tariff stuff, it was close to $100. Marvell has gone from roughly 50 to 70. This AMD is up a bunch, especially over the last month or so. I think the market's starting to get wind of this. You probably need another earnings quarter or two. And I think all these companies are going to re-rate, which means a massive price to earnings multiple expansion. And then you're going to get married to a much higher growth rate over the next 12, 24 months. We are in a golden age of investing, especially when it comes to artificial intelligence.
I have viewers who line up for me to tell them when you're on the show next. You're doing well, son. Hope you're making a lot of money.
What is there to say about NVIDIA that hasn't been said before? Because of its major contribution to the artificial intelligence, AI revolution, the Jensen Huang-led semiconductor titan is arguably the most important corporation in the world today. NVIDIA is one of the few firms that almost no one is pessimistic about. Experts and investors almost universally praise the company for its cutting-edge chips, which are favored by hyperscalers like Microsoft, Google, and Amazon, among others. However, the company's activities, or lack thereof, in China have been a significant obstacle. After being negatively impacted in January by the rise of AI startup DeepSeek, NVIDIA suffered yet another setback when President Donald Trump banned the company's H20 processors from being exported to the second-largest economy in the world. However, it appears that the company's troubles in China may finally be over, since it was just announced that NVIDIA has received approval to start selling its H20 chips in the nation again. This development has been welcomed by analysts, who estimate that it can boost the company's top line by roughly $15 billion, bringing its regional sales to $20 billion for the entire year. Additionally, this caused the price of NVIDIA's stock to soar, and it is already up 29% year-to-date. Additionally, it recently surpassed $4 trillion in market capitalization, making it the first corporation in the world to do so. Can anyone join the NVIDIA party now? No, and here's why. It would seem that a stock that has rewarded its investors with a staggering 1,596% gain over the last 5 years would not have more potential for growth. Rethink your thought. About a month has passed since I wrote my last article about the firm, and NVIDIA's stock has increased by roughly 19%. Of course, the China news is mostly to blame for this, but there are other factors as well, since NVIDIA's following is growing daily, and for good reason. For example, NVIDIA leads by a significant margin in AI training workloads, rather than merely participating. According to industry data, the corporation has over 80% of that market. The company's proprietary platform, CUDA, is largely responsible for this leadership. For many years, developers have developed on top of CUDA, which functions much like the operating system of the AI computing industry. Replicating such an ecosystem is challenging. Last but not least, NVIDIA's capacity to supply complete AI computing environments rather than simply components gives it an even greater advantage. NVIDIA provides entire systems rather than just a chip here and a bit of software there. Yes, this includes CUDA, but it also includes scalable hardware frameworks like MGX and networking options like NVIDIA Link and Spectrum X. Additionally, its enterprise-grade technologies, such as Workbench, DGX Cloud, and AI Enterprise, enable clients to implement AI without having to start from scratch. As a consequence, NVIDIA's position at the core of the AI computing stack is cemented with a vertically integrated package that few can match. NVIDIA's unrivaled dominance in the semiconductor industry and its constant emphasis on innovation and growth haven't come at the price of its performance or financial restraint. Instead, the business has kept up a run of impressive outcomes that solidify its standing as one of the most continuously high-performing companies in the market today. So, what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now, let's get back to the video. NVIDIA reported $44.1 billion in revenue for the fiscal first quarter of 2026, a significant 69% increase over the same period the previous year. Its data center division, which generated $39.1 billion in sales and represented a 73% annual growth, was the main driver of this outstanding performance, further solidifying its position as the company's primary growth engine. With earnings per share increasing to $0.81 over the consensus forecast of $0.75, NVIDIA's financial performance was particularly noteworthy. Analysts predict that this momentum will continue into the upcoming quarter, with earnings of $0.94 per share on revenue of about $45.59 billion. Not all figures, however, were unconcerned. Compared to the 78.9% reported during the same period last year, the company's gross margin dropped to 61%. Investor fears about margin pressures and escalating competition have been allayed by the fact that NVIDIA continues to dominate the GPU market despite this reduction. The management expressed continued confidence in the company's long-term strategy and execution by restating its full-year gross margin target, which is still set in the mid-70% range. Regarding cash flow, NVIDIA's financial stability remains strong. Operating activities generated $27.4 billion in cash, a 79.1% increase over the previous year. With $53.7 billion in cash and equivalents at the end of the quarter and no short-term debt commitments, the company demonstrated its strong liquidity position and reaffirmed its ability to finance acquisitions, capital expenditures, and other strategic plans. Overall, NVIDIA's projections for the future continue to be far ahead of the market. Further proof of the company's ongoing superior performance and industry leadership comes from analysts' current projections of revenue and earnings growth rates of 59.97% and 64.95% respectively, which are significantly higher than the sector medians of 7.14% and 11.08%. Analysts have given NVDA stock a strong buy rating, with a mean target price of $181.09 in light of all of this. This suggests a 5% increase in value from the current levels. 39 of the 44 analysts that followed the stock have rated it as a strong buy, 2 have rated it as a moderate buy, 3 have rated it as a hold, and 1 has rated it as a strong sell. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Step back, the S&P, again, hasn't closed at highs like this every day since November 2021, which is just before the index peaked and took years to recover. Are these highs, combined with the memeish mood, a good sign or a bad one?
Well, I think it's probably a good sign that the memeish mood hasn't gotten as out of control as 2021, right? If you just look at the volume in a lot of those names you guys had up on the screen earlier, it's not nearly as close to what we saw in GameStop and AMC and a couple other names that got sprinkled in. For one thing, it is a little bit spread out, the bets that folks are making, trying to hit that home run. But I also don't think that there's enough staying power in this meme mood, because what we're seeing in my estimation is investors who have done really well since Liberation Day in tech stocks taking those gains and then looking for another place to park those gains for a little while the market is at all-time highs, like you just said. So I think what we're going to see is a return back to retail's favorite names, the NVIDIAs, the Teslas, names like that, about a month from now, where those meme stocks will cool off and we won't be talking about meme mania the same way we did in 21.
Well, even those favorite names are pretty hot. What does a balanced portfolio mean right now in 2025 with the indices where they are? And what's the alternative to selling stocks and going to cash if you're queasy about these highs? Because trying to time the market usually does not end well.
Yeah, John, it's almost a curse word right now talking about a balanced portfolio or diversification. Folks just don't want to hear it because the market is doing so well. And right now, everything is consistently going up and to the right. But I think to your point, this is a great time if you were a person who was extremely concerned back in March, April, saying things like, I don't like the way the market looks and I'm considering getting out. I think I might need to sell something. I think I might need to make a move. You're being given an opportunity to exit before things actually start to get choppy. And the trade scenarios aren't all solved, right? We were talking about 90 trade deals in 90 days or something like that. So the pause that's about to come undone in the next couple of weeks here might return us to a place where investors start to get worried again and you see that trade coming back down. So I think anybody who is riding high right now, feeling great about the gains they're seeing in their portfolio, but just 4 months ago was extremely concerned about where do we go from here because the market had fallen almost a perfect 20%. I think this is the gift that allows